Hey everyone, this is Mark from Stocks and Cash. It's Thursday, March 15th, 2018, and I'm here with your market update video. I'll talk about my holdings and then some potential trade setups for tomorrow. So as usual, here we have the SPY, and let me zoom back out. And here we have our gap that we're looking to fill and our gap up here that we'll eventually look to fill. And guess what? Neither of them still have filled yet. So the low of today's candle was 274.43. The high of this candle on 3/8 was 274.24. So there's still about 20 cents or so of room. I know you can't see it in this view, but if I zoomed in, you'd be able to. Of room of gap that still needs to be filled. Now, gaps don't need to fill. It's just typically gaps do tend to fill. Now, right now, the SPY is trading around 273, which 274 rather. So that would put us right below the gap. So that would kind of be an interesting open tomorrow. We could actually close. We could actually open below the gap and fill the gap from the bottom. Now, whether we get rejected bullishly and come back down lower, or we fill the gap and continue on and have a green candle tomorrow, that remains to be seen. And just because we're down now, it's about 10 o'clock at night. There's no reason why we couldn't open up green tomorrow. I try not to put too much stock, no pun intended, into futures in the evening, because anything can happen overnight, usually around 7:30, 8 o'clock, unless there's some kind of announcement at 8:30 or 9. Typically, that's when you can kind of tell approximately where the market will open. So, it's just kind of some speculation right now based on where the futures are trading at. But, right now, as I mentioned, they're around 274. No guarantee that we'll stay at that level. Certainly we could go lower overnight. We could come back higher. And the other thing that could happen is we could gap down and continue on down and not even fill the gap tomorrow, which would be a pretty interesting play as well. So, we kind of got to be ready for everything. But as far as the SPY goes, again, I am not planning on taking any trades until there's a clear direction. So as long as we remain in this zone here, this no man's land, I don't plan on getting into the SPY itself. And even if we break out bearishly, there is, as I mentioned, a lot of support with the moving averages. We've got this support here that was kind of put in on these candles here back in February. So not really looking to short the SPY, but, at least not long term. I mean, if I did get into a short position, it'd probably be for a day or two. But then again, considering it's the weekend, I don't want to go short on a Friday when the market is, kind of uncertain as to where it's going. So I either way, there's no chance I'll take a position in the market itself, in the SPY tomorrow. But it'll be interesting to see what the market does decide to do. Now, if you take a look at the Qs, Qs are a little less complicated than the SPY. We are still above this breakout level here. We've kind of come down and tested it. Volume is descending, which could indicate that we might bounce here. However, I would still like to see this gap fill before we continue on up. Again, it doesn't have to happen, but it would be nice in my mind if we come down, test this gap, and then take off. So I do think the Qs are looking healthier. Of course, there is the opportunity or potential for the Qs to open up lower, or wherever they open up, and keep on pushing down and start to roll over. So again, I really feel like we're in an indecision point in the market. Certainly we could continue on sideways. Doesn't necessarily mean we're going to move up and down too far tomorrow. Options for the month do expire, and typically the market doesn't move a ton on monthly monthly options expiration. So we'll see what happens, but I'm not expecting. I'm expecting, I guess, potentially this gap to get filled. That's what I would like to see ultimately. Whether that happens or not will, is yet to be determined. So let's move on to holdings. Intel I closed out of today. Now, granted, we closed at the breakout level, slightly below it, I think. Let's see, the low or the close was 50.88. Well, we kind of closed right on it. I didn't like the price action. MACD is rolling over. RSI is rolling over. Stokes are rolling over. Volume was about average. And the 8 EMA is at 51.03, so we did close a little bit below the 8. We might come down and test the 21. We could also bounce depending on what the overall market does, but I just wasn't liking the price action, and Intel got out of that last option for about an 8% loss. So, you know, could have been better, but the overall trade was positive since that was up 42% on the original option that I sold. First Solar, still holding this one, but down a little bit. We bounced off the 8 EMA, so as long as we stay above the 8, I will hold. It would be nice to get through these Fibonacci retracement levels, and that retracement I have is from this big white candle here on the 11th of January down to this low on the February 9th, which is, you know, that's a typical low that a lot of stocks have put in. So on the 9th, I mean. So you see that we had this descending triangle, broke out of it on the 5th, and we've started to come back up. Not the strongest move. I got in on, I believe this candle. I think the high on or around the close on 312 because we had broken out. We've kind of pulled back a little bit. Volume has been lower than normal. So again, this could be some kind of bullish flag where we're kind of pulling back and may bounce, you know, tomorrow or sometime next week. So not giving up on on First Solar, and you can see that there was a double bottom put in here as well. So you know, the patterns are indicating a bullish move. It's started, but we'll see if it continues on or if it fails. And then the other thing that I've pointed out is that this is a really big cup and handle pattern that's trying to play out as well, which can be very bullish. So there's a lot going for First Solar in terms of patterns and candlesticks. So we'll see if we continue on or if we break down below the 8 EMA, but that's kind of my line in the sand. If we close below it, I will get out of those calls that I'm holding. A couple other positions that I opened. Let's look at Best Buy. Opened up some puts at the end of the day, looking very bearish. We closed at the low of the day. The low was 68.94. Sorry, so we closed just above the low. We closed at 68.99, so about 5 cents higher, but practically at the low of the day. Volume was decent. Stokes are obviously very bearish. Certainly can stay in this range for a while, as we've seen on either side. You know, we were all the way up here for weeks when we were making this move up. So certainly it could stay low for a while too if the stock was going to keep on coming down. MACD is bearish, RSI is bearish. What we do have, the saving grace in Best Buy is this 100 simple moving average. That would be my first target. It's at 66.49, so about $2.50 to get down here. I think that would be a pretty decent profit, probably around 25 to 30%. So that's the move I'd be looking for. And if we're looking for targets below that, let me redraw the fibs quickly. We'd be looking at targets of 61.18 and 56.35. And, you know, in my mind, that would mean that the market is rolled over, because we'd be breaking this low on the 6th for Best Buy is where the low was put in. So if we break that low, so first of all, we'd have to break the 100. We'd have to break this level here, and I just don't see that happening if the markets start to rally and get strong again. So, but I do think hitting the 100 is well within reach. I think it's totally possible. So I'm looking, as I mentioned, for a 25, 30% gain on this trade. A couple others I got into. Dollar Tree didn't quite work out the way I was hoping today. We came up and touched the 8 EMA. Let me go to a daily chart so I can show you my thought process on this trade. So we opened up pretty strongly, had a big bullish candle on open. We had then followed by a bearish candle. We didn't close below it, so I didn't get in as of yet. We came down, broke, and closed below at 10 o'clock. I was not actually watching at that point, so I didn't get in here. And then we had this candle, which was closed below this low, so this was acting as resistance. I thought we had failed it and was going to come down. So that obviously didn't happen. We kind of rallied a bit. We touched the 8 EMA. Let me zoom, well, touched the 8 EMA, and then we kind of came back down. So I'm down about, I think, 10% right now on my trade. You can see it was a pretty ugly candle. Certainly there could be some more downside. And really the high of this candle, which is the 8 EMA at 95.2. 95.50 is the high of the candle. The 8 EMA is at 95.2. So 95.50 will be where I would put my stop. So give myself about another $1.50 risk to see if we can come back down and retest this breakout level here, or breakdown level I should say, at 87 basically. And then the last one, CVS. This one played out very nicely for me today. You can see that we broke below these recent lows here. I got into the trade, and it kept on moving down throughout the day. Pull that up for you quickly. So you can see it just, we opened up, let's see, where's 9:30? Opened up here at this candle. We kind of pulled up a little bit and then just kind of broke down throughout the day. I don't think I got in at this candle. As I said, at 10 o'clock I was busy. I think it was this candle when I finally got to see what was going on in the price action. Got in on this 10.50 candle and wrote it down for the day, up about 25% on that trade. And if we look at targets, I think this target of 63.45 is within reach, and ultimate target of 58. I think it's 58.58. Yes. So this will be my first target to take a put off, and then see if we continue on down to the second target of 58.58. Stokes are weak. MACD is rolling over. If MACD crosses, I think this one could really flush out further down. So that's what I'd be looking for on CVS. So let's look at a couple of potential trade setups for tomorrow. They are all bearish. Again, I would be more inclined to take these trades if the market itself starts to roll over, which may or may not happen. We'll see. But KHC, this is something to do with Heinz. You can see we kind of started putting in a low here, and we broke through it today, getting ready for another leg down. So I see a target of 62.54, and you see the level that was broken earlier in February. We broke it here, moved a little below it, and we kind of retested it a little bit, and then we've pushed back down again, and now we're making new lows. So I do think that that the stock has potential to keep on running down. 62.54 is the first target, 57.58, 5-minute rule since we're already below, and your stop could be either at the high of the first 5-minute candle or the high of this candle that we put in today. Next stock, Carnival Cruise Line, CCL. So you can see that there's a pretty clear-cut descending trend line that's forming here, forming a big triangle, a descending triangle, and price is getting rejected off of that line here. You can see there's a gap. Again, gaps tend to like to fill. Obviously, the SPY hasn't wanted to fill its gap yet, but I could see Carnival coming down and filling this gap at least. That could be a first target at 66.05, second target at 64.83, based on this move from here to here. And then targets could be below, but there is a bunch of resistance, as you can see from this consolidation period here. So not necessarily expecting Carnival to break below this low or this low, but we may come back and test them. So that's kind of what I'm thinking on Carnival. And also, as I'm looking at this quickly, the volume was pretty decent today as well. Campbell's Soup, CPB. This is something I brought up a few weeks ago. We had this huge, ugly, bearish candle that broke support from 3 years, basically. And we kind of back tested that support, came down, back tested it again, and failed again. And now we're getting below the low of this candle here on the 6th. So the way I've drawn the fib, this was the original fib that I drew from this high to this low. We came back and tested the high. It got rejected. We pushed through the low, came back and tested the 3-year resistance, hit our first target, came back and tested the first-year resistance again. Now I think we're going to push back down, retest the first target, and potentially get to the second target of 40.63. So and you can see we're kind of starting to form this descending wedge type pattern as well. So I do think there is potential for Campbell's to roll over further, especially if the market decides to roll over as well. You can see MACD is bullish, but it's starting to roll over. If we get that crossover, I would expect this to well, having a MACD, a bearish MACD crossover would give you the impression that price will continue on bearishly. Obviously, price dictates what MACD does. That's what I'm trying to say there. So, but MACD is a good indication, can be a good indication of price trend. So this would be a 5-minute trade since we are below this this level here of 43.45. If you want to try and come in and get to this first level here, and then maybe the second at 40.63. Couple more here. Disney. I believe I pointed this one out a couple days ago. So you saw that we had a big bearish candle followed by a big bearish candle, a big bearish candle followed by a big bearish candle and a doji, a big bearish candle followed by an inside day, and then a candle with a shaved bottom, meaning there's no wick, and we close towards the low of the day. You can see MACD is almost rolling over again. Stokes are bearish. RSI is looking bearish. So I do think that there's opportunity for Disney to start coming back down, test these lows here at 101.46, and potentially the low here on the 9th of 127. So I do think there's some downside on Disney, especially if the markets roll over. Last but not least, Halliburton. I think this one has an excellent opportunity to run lower if we break down below this support zone here. So we put in our low on the 9th. We tested it a few times earlier this month. We're testing it again today. Let's see. So that the low of this candle was 45.10. The low, the close of today was 45.29. So still slightly above the low of this candle. We definitely want to have confirmation that we're going to push below it. But if we do, I think it's possible that we come back and test these lows, which coincides closely with this this fib level, 41.74, and then we could also come back down and test this low here, down at 37.75, which coincides with this second fib target of 37.34. This one's probably my favorite trade out of all of them because Halliburton doesn't necessarily have to trade with the same direction as the market. So certainly keep an eye on it. This would be an end of the day trade, although you got to be careful because Monday, you got the weekend. It's up to you if your trade plan allows you to hold over the weekend, or you feel comfortable doing so. Feel free. But I would just use a little caution holding, getting into a trade, I guess, at the very end of the day on Friday. A lot could happen over the weekend, so I think it's a little risky, but not out of the question if you're confident that the trend is going to continue on down. So that about wraps it up for tonight. If anyone has any questions or comments, feel free to leave them in the comments section. Happy to answer any questions you have. Otherwise, have a great night. Good luck trading tomorrow, and have a great weekend.